Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Well, my camera is not working. What's with that? Let's fix that. Activate. There we go. Day before Thanksgiving. And let's see here. We do have continued jobless claims gets moved forward, so we're going to get that today as well as for durable goods. So I have maybe a little bit of stuff to go off of. I am also seeing some interesting things. You can't see it anymore. There was an iceberg at 07.5, which I thought was a little odd. So somebody's out there doing something. Let's go to the chart. So you can see yesterday the S&P 500 struggled a little bit early on, but in the end we are higher and we're now up at no, sorry, that's wrong. That's not the S&P. There's the S&P 500. Right, they struggled a little bit yesterday, but we're digging it out. Okay, Treasury is kind of a similar thing. We had an auction again that did not go so well. We'll talk about that here in a bit. But the Treasuries are boosting higher again. Probably as people go in to flight to safety for the weekend. You don't want to hold anything too risky on the weekend. Oil taking another big plunge this morning. Look at that. That's a pretty steep decline there. Gold on the upswing, silver on not as much of an upswing, but silver's been looking so great. We cut them a break on that one. And Kappa taking a little bit of a pullback after 2 days ago, really great bull run. Yesterday, pretty choppy. The dollar maybe shifting, pulling back a little bit yesterday. And then the big one, the one that moved the most yesterday, at least, Bitcoin. And they are a little bit lower. So yesterday we had action on Kraken and Binance. A lot of headlines and stuff. They tried to dig it out, but then overnight they dropped further. So Bitcoin has suffered a mortal wound. I would say it's probably just a flesh wound. Probably not actually mortal. Doesn't mortal mean that it will kill you? I don't think it's going to kill Bitcoin. Kind of makes me wonder, though, if action on Tether is lurking out there. Obviously, the Department of Justice has been doing a lot of work lately, so I can't imagine that they'd be going after these exchanges and not looking into what they can do with Tether. But I could be wrong. So, meanwhile, with OpenAI is the big story that we've been getting all this week since last Friday. And this morning we learned that Sam Altman will be returning to OpenAI as the CEO. They have ousted the board. The board has basically resigned. They've replaced everybody and they're bringing Sam back. So, listen, I have a bone to pick. Oh, that was too loud. I have a bone to pick with the writers of this season. This is just the absolute most ridiculous storyline I've ever seen in tech. Okay, so here's the continue. Okay, so durable goods. Wow. Okay, durable goods. We got negative 5.4 versus a negative 3.5, and on initial jobless claims we got 209 versus 227. That's odd. What's going on here? So the Treasury's sold off of that. I would think that. Yeah, okay. Yeah, no, jobless claims being less than expected, they would sell. That's why they're selling. The core durable goods was more negative than expected. I would think that would maybe be a positive, but it doesn't seem to cancel it out. That said, the amount of decline that you got in the treasuries wasn't that big. It was just kind of like your average news piece, actually. But that could change the landscape. Oh my gosh. You know, like the thing is we had like a really good, well, not a really good, but like a weak jobs report last time and a weak inflation report. I suspect that inflation will remain somewhat okay. Like I think that we'll continue to get like in the spot 3 area. Spot 2, spot 3. Maybe we'll get like a spot 3 when they're expecting a spot 2 and the market will be unhappy about it, things like that. But these kinds of prints make me think that like the employment could come back so quickly. Like this is a market where I think there's still a lot of labor supply problem. And so, you know, companies get any kind of reprieve from the interest rates and then they just go hog with it. And so seeing the initial jobless claims drop lower than anticipated is kind of like, now I know there's probably going to be some stupid leftist that doesn't understand economics out there that's going to be like, well, shouldn't we want initial jobless claims to be as low as possible? No, because don't you want people to move between jobs? There needs to be a certain amount of turnover in the jobs in the business world. There needs to be a certain amount of turnover. You need people to be moving between jobs. Otherwise, you know, there aren't vacancies, and then people that don't have jobs wouldn't have anywhere to go in and find a job, right? There needs to be turnover. And that, like, natural amount of turnover is somewhere in the 200K per month area. So, you know, 209 is probably a little bit less than what would be healthy for the economy. So that's why I'm concerned that the jobs market could heat up again and then interest rates would get just killed. And you can see that they're quite I mean, listen, it wasn't a huge move, but I would say they're still quite sensitive to those jobs numbers. All right, how are you guys all doing, by the way? Dan, good morning. Dom, Jiwi, Alan, Sam, Walter. I'm so impressed because it's the day before Thanksgiving. A lot of people would just not trade today, right? Well, it would be here. I don't see myself taking a trade, to be honest. I don't see myself taking a trade until next Monday. But you never know. There is definitely some activity going on here. Definitely some opportunity for us to do something. It also kind of looks like the overnight action in the treasuries was kind of mostly buy, but it is also quite fraught. Like there's some swings and so forth. Like this move down, pretty decent move. It's not even like close to getting back to where we were back like 2 hours ago. So there might be enough volatility for us to do stuff. Buy. I am kind of tempted to be buying the treasuries. I mean, it seems to me like that the flows are long, both in the treasuries and the equities. But I still have that swing on in equities, right? What is it up to? Like, I think it's just where we were at yesterday, yeah. 362. 362 on that position. How far do you think it will get before before the time period when I want to take it off in a week or two? Let me blow my nose. Not a big news that dropped on the market and tends to be corrected, and you can see a lot of buying on bonds, I think. Yeah. Not financial advice. You know, so can I rant about that, actually? I think it's so funny when people on social media and whatnot are like, by the way, this is not financial advice, okay? Because number one, it's not as simple as just coming in and saying, well, but this is not a financial advice, and then you can say whatever you want. And number two, it shows that they don't actually understand what financial advice is. So what would be financial advice? Financial advice would be, you've showed me what all of your assets are and what your income and expenses are, and I know everything about your financial situation and what your goals are, and then I make a reasoned decision or recommendation to purchase a security or make a trade in the treasuries. Basically, it's personalized, right? So if I ever get into running a investment advisory firm, in order for me to work with you, you would have to fill out this paper that would be like, okay, list all of your investments here. What is your income and expenses? What are your goals, right? And then I can make a personalized recommendation to you about what you should do about something, right? So it's that personalization that makes it advice. So if I just get on the internet and I say, I think that the 10-year treasury is a buy here because the flows have been mostly long overnight, long over the weekend. We anticipate them to continue to be long despite this piece of news that's causing them to sell, which I'm not 100% sure yet. I kind of want to wait. Like I would be leaning long, but like, look, they took a pretty big hit right there. So I don't know if that's actually correct yet. I don't think it's time for us to take a trade yet. But, you know, I'm just giving general advice to the internet, or I'm just running through my decisions for me. But it's not personalized to you. It doesn't factor in your goals and your risk tolerance, etc., etc., etc. And so that's what would make it financial advice. No, I will not be streaming through Thanksgiving. So tomorrow and Friday, no stream. I would like to wake up early and stand in line to get into a large retail store of some sort that's giving away gift cards or something for waiting in line. I enjoy doing that, but I haven't seen anybody really doing it. It's like online is just ruined Black Friday. It's really what it comes down to, is online has ruined Black Friday. So will Matt be there on Thursday? Really? Oh, okay. Lucas probably doesn't even know if Matt will be there. He's just saying that because he thinks that will trigger me. It's okay. It doesn't trigger me anymore. You know, it's kind of interesting to think about, because there was a period, and I think it was mostly because Salim tries to troll me, you know? There's a period where we'd hear about Matt a lot, and every time that Matt was having a bad day, we would hear about it. And then it kind of switched around, where like whenever his name gets brought up on Reddit, there's tons of people that are like, oh, no, don't, he's terrible. Don't go and watch him. He's a terrible trader. And now I don't really hear about him anymore. YouTube still pushes him, as far as I can tell. I don't really hear about him anymore. You guys buy fireworks on Christmas? No, that's not a thing here. I guess you can have fireworks for New Year's, but not very many people do that here in Utah, at least. Which is kind of funny, because it would make more sense to do fireworks in the middle of the winter than it would be in the middle of the summer, when it's so easy to start a fire. Okay, serious talk though before we go into anything else, because you guys are getting chatty and want to take me in all sorts of different directions. I tell you, it's legal to buy dynamite bombs. Oh yeah, like M80s and stuff. Yes. Okay. Yesterday there was a bond auction. We need to talk about the bond auction. I tweeted about this yesterday. I don't know if very many people saw that tweet. Actually, I didn't come in here and check my notifications. Twitter is so frustrating. It's like, how do you build an audience? I guess that I need to go and like comment on lots of other people's stuff, I guess. Okay, but there was a bond auction yesterday that didn't go very well. And that was after we had the 20-year bond auction the day before that did really, really well. And so each of those events, you saw pretty strong reactions from the markets, including in the S&P 500 off of the auctions. Is starting to become something that like equity traders have to pay attention to. And then they're like, what's with these bonds? You know, how does this work and all this crazy stuff, right? Yes, I have a Twitter. I maybe tweet like once a day, if that. I'm just not a Twitter guy, I guess, in the end. I guess when all is said and done, I'm just not a Twitter guy. But I digress. Okay, so what's going on with the bond auctions? How do you interpret it? Because I think some people are going out there saying like, oh, okay, 20-year bond auction was really good. That must mean that we're out of the woods on that. We don't have to worry about bond auctions anymore, right? Well, no. This is something where you're going to have to look at all of the different tenors of the auction as a whole. Why is that? Well, what's happening is this. The Treasury has a lot of fun. It's not as bad as it was, but we're not bringing in as much revenue as we wanted in the Biden years. And the deficit continues to run really high. The things that Biden is doing aren't helping that. And so the U.S. Treasury has to offer a lot of bonds. Again, it's not as bad as it was like last quarter, but it's a lot. And so because of that, the dealers kind of have to adjust to that. So who are the dealers? The dealers are these companies, and they're basically, their whole thing is they go and buy the bonds at auction, and then they turn around and they market and sell those to the larger market. Okay. So these are the guys that like at the beginning end of the month are like rebalancing and buying for what they anticipate they will be able to sell in the next month, for instance. And they go when the treasuries are auctioned off originally and turn around and sell them. Okay. And the way that the auction works is there's like competitive and non-competitive bids. So like first they take in all of the non-competitive bids. Those people, they just take whatever they get, right? And then you get the competitive bids, and the competitive bids are basically like, I'm willing to buy this much at this interest rate and this, and you know, it keeps going. And so then the Treasury goes in and starts, you know, marking them off, and it keeps going higher and higher and higher until they've filled all of the treasuries that they need to sell, right? So if people don't want to buy a whole lot of treasuries, then that means that the interest rate ends up going really high. Basically it's like you've got, let's see if I can draw it here. Is you'll say like there's 1 million, they want to do it at 4%. There's 2 million, they want to do it at 4.1, right? And what they do is they keep taking these and taking these and taking these until they've filled the auction up, right? And basically what happens is if there's not enough like bids, then the dealers take the rest of it. Okay. So for instance, the auction a couple of weeks ago, before the jobs numbers and all that was really, really bad. The dealers took like 20%, which was twice as much as they normally do. That means that there really wasn't a whole lot of demand for those treasuries, and the dealers had to eat a ton of it, right? Okay, so there's kind of some risks as the dealer doing this, right? Because one is that if the auction goes bad, they have to eat a lot of treasuries that they might not want to have, right? The other thing is that as the treasury is offering more bonds, you know, that's going to have an impact on the market that's not necessarily favorable to the dealers as well. So what that means is that the dealers have to be kind of particular about what they actually buy. Because what they're going to have to do is they're going to have to move over here and buy the short-term treasuries, because the U.S. Treasury is pushing all of this extra supply into short-term treasuries, like 2 years and less. Okay, so all of these dealers have to move over here to absorb this huge supply that's coming over to prevent the market from like completely falling apart. And what that means is that they have less money available to buy these other tenors, like the 10 and 30. Okay. So now the 20 year is special. Okay. The 20 year has, and I don't know the exact specifics of it, but it's like special at auction. There's like this extra bonus that they're giving for 20 years that make them more desirable right now. And that's why if you look at the yield curve right now, there's like this huge kink where it's like it comes up and there's always usually a kink at the 10 year, and then it comes back up, and now there's a kink at the 20 as well, and then the 30 is normal, right? So they really, really like the 20 years. So if you were watching the auction on, what was it, Monday, when they auctioned off the 20 year, and that was really good for the markets, and you said, oh, okay, everything is fine, then you kind of get fooled when they came over to the 10 year and there wasn't a whole lot of demand for the 10 year, right? So you're going to have to look at all of the auctions for the month and kind of judge what was happening and what parts of the curve they were favoring, essentially, right? And this makes what's going on in the yield curve particularly interesting to us. So they are market makers. Yeah, in a sense, they are market makers of sorts. They're the ones that if you want to go and buy a 10-year bond, you go and you buy it from the dealers. So we come over here to the charts. This means that what we're getting for spreads really matters a lot. So they just flattened here. They flattened because the jobs number being good, pushing the treasuries down, they're moving down and flattening a little bit. Okay. I guess we need to zoom out a little bit though. If we come here and we look at 2s and 10s, what were they doing yesterday? They were steepening. Because remember, steepening means that our spread chart is moving up, that the difference between the short term and the long term is getting larger, essentially. So that means you buy the short term one and you sell the long term one, right? So this is buy the 2 year and sell the 30 year, essentially. Right. So what does that mean? That means that we would expect at auctions for 2 years them to be buying those, and 30 years them not buying them as aggressively. And it's very interesting that going into the auction that you were seeing that steepening in the yield curve. So that's something that I think we should keep an eye on going into auctions. Is what is the yield curve doing going into auction might give us a hint as to how well that auction is going to do. So if it's a shorter duration, the ones that are like the 2 years, a shorter tenor, let's call it, that the like the 2 years, and we're steepening, then that means that they're probably going to buy them. And vice versa. If we're flattening going into that, then they might not be as strong demand for those 2 years. And vice versa, if it's steepening and it's a 10 or a 30, then that might suggest that the auction might not do as well. And if we're flattening, that might suggest that that auction will do really well. So that was probably really confusing, but if you draw it out, just remember, up is steep. Up on the chart is steeper. You figure it out. So this is going to be something that we're going to have to keep an eye on a lot over the coming weeks, or over the coming months, really. Probably at least for the next quarter, if not the 2 quarters after that. It could get to the point. I tell you what, if you got some jobs print that was really good, or you had a holiday season that was really good, all of these sorts of things, and then, interest rates started to rise again, that, you start to get to a point where it's really, really hard to fund that and to get the people to buy all of that government debt. it starts to get to a point where basically the only way out is to have a recession, right? Have a recession, but then a recession where you don't really get to spend your way out of it. That's actually happening in Germany right now. There was a big court case about how they were going to use certain funds, and the court basically said, no, you can't just use them generally. And so that's a whole bunch of stimulus that was going to prop up the German economy that's not going to come. So I'm now seeing some people speculate that Europe will fall into recession. So maybe it's maybe it's going to happen. Maybe we all just get dragged into it, and we just can't see it yet. Yeah, it is very interesting, isn't it? You know, I saw this thing. I didn't watch the video, but I was just seeing the headlines. I think it was Zero Hedge that posted it. Maybe I'm wrong. Maybe it was on the conservative subreddit. But Tucker Carlson was giving a speech somewhere, and he said that the stuff that we're going to see in the next year will just be unbelievable. I don't know if he knows something or if he's just speculating that, like, because the Democrats are doing so poorly with Joe Biden, that they're going to have to pull some pretty wild tricks in order to try and sway the election their way. I don't know. But when I just look at the economic situation, I see a lot of contradictions. And this scenario that the market seems to have laid out, where everything is hunky-dory and we just get a soft landing and that's all there is to it. I'm not saying that what's going to happen is necessarily going to be bad, but I'm very, very skeptical that the straight line conventional thinking thing is what's going to happen. I think that we're going to get some really, really big curveballs in 2024. Because there's just so much going on and so many competing interests and so forth. You're going to see them play out, and it's going to result in some big moves in the market. So you're going to continue to see some volatility off of political stuff. Heck, this OpenAI thing is a great example, right? All that drama, and then he comes back as CEO anyways. Okay. That's didn't see that one coming. Do you recommend watching the Economification Financial Market Microstructure series? I've never heard of that before. I'll say this. I have an order flow series that talks to you about the things about order flow and the market microstructure that I think are most relevant to you as traders. There is a book called Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot et al. And that, I think, is the New Testament of trading. That's the book that I would go and read. That's the resource that if you really want to get deeper into it, I would go and read. It's great, but I wonder, is it good for trading? Well, that's the whole thing. That's the whole thing that's so interesting about it, is that I think that the retail trading world has largely ignored this stuff. One, because it is, I would say, a minority view within the scholastic community. That's not to say that it's wrong. Okay, they have a very, very good data. They have very, very well proven information studies, etc., etc., etc. But like, these studies weren't posted in the biggest financial journals, for instance, right? It kind of goes against the grain of what a lot of economists believe about how the market is efficient, and it kind of says, no, the market is not efficient at all. And so a lot of people don't want to hear it. Probably 20 years from now, this will be like the stuff of legends. And people won't believe me when I tell them that when it first came out, that people largely ignored it. is what I think is going to happen. Now, part of why that is because I think that some people have had a hard time understanding the significance of it. They see the math, because I did that at first too. Like, that was the thing, is when I worked for Goldman, somebody told me about On Grand Chris and said, read this study about On Grand Chris. And I didn't get it. I was like, okay, I think I understand the math here and what they're doing. And all it is a schedule for like splitting up your orders. But like, the thing that's significant about it is that they're saying that you save more money from reducing your impact on the market and disrupting the liquidity as little as possible, rather than all of these tricks of, following VWAP and all that sort of stuff. That's actually like really super significant finding, right? That really, really shifts the approach to markets for block traders. That's like the whole basis of how these block traders operate now. And the problem is that you kind of have to see the whole thing. I didn't realize the significance of it until I read that book, and not even until I was almost done reading that book, because I got halfway through it and I was like, well, I'm just gonna plow through it because I'm not sure I understand what this is or why it's relevant to us, right? It wasn't until I saw the whole picture that I understood how important it was for us as traders. Now, the upside of that is that I'm giving you the big takeaways in my order flow video series. And I go into a little bit more detail in the strategy document that you can get if you go to speculatorseth.com/strategy.html and put your email in, and it will email you the PDF. I go into much, much more detail about it, but I'm basically giving you the big conclusions that I've found from it. There's probably other insights that you can gain from it. And yeah, it's math heavy. It's difficult winning. But it is pertinent to our trading. And I think that if you are going to find a new stylized behavior for markets that the rest of the market hasn't really picked up on, that, you could make money off of, it's probably going to come from understanding the math and principles in that book and taking them further. It's either going to come from that or understanding statistical arbitrage. Understanding statistical arbitrage, or just being able to predict flows. That's basically like the three places that edge comes from for hedge funds, as far as I understand. So yes, I would go watch that. Now, I don't know this video that you're talking about. I think that I saw somebody post. I think you're talking about a video that somebody posted like a week or two ago, and it looked like a college lecture about market microstructure, and I haven't had the time to watch it, so I can't comment on it. But if it's like something from a college course or an academic thing, it's probably worth looking at. Congrats on the house seat win in Utah. I didn't know that anything happens. Celeste Malloy declared winner of 2nd congressional district election. Must be what you're talking about. I really don't. I don't know her, so I've kind of... Let's read about her. Oh, so she's from the country. Wouldn't even call it the country in Utah. It's just like the nowhere, the Badlands. Yeah, this is the one replacing Chris Stewart. Oh, yes, that's right. She beat Greg Hughes. It was kind of like this nobody that won at convention. But I don't know if you should congratulate us. I mean, it was going to be a Republican. That district is gerrymandered for Republicans. Of course, it's going to be Republican. They basically take the one teeny tiny little liberal part of the state in downtown Salt Lake and split it up between all the congressional districts so that there's no way a Democrat could ever possibly hold a seat. Because there was, for a long time, one of those seats was held by a Democrat, and it was a great source of, it was a real thorn in the side of the Utah Republican Party, let's put it that way. How can the average retail folk go about understanding the math heavy side of the book? Well, so if you didn't get far enough in math to understand calculus, then it might be a really heavy lift. If you don't understand calculus, then it may not be worth it to try and learn the math. You're too far behind. But for the rest of us, I would say understand the concepts first, memorize equations. You just kind of have to take it. You kind of, so think of just salt. Okay. I think you can always learn calculus. Yeah, you can, but calculus is a difficult subject to learn. Kind of depends on how old you are, too. I guess, Lucas, you're not too old. That you might still be able to learn some calculus, but I have no clue how you would go about learning calculus outside of school. That would be really hard. But no, there's this concept of gestalt that I think is a really, no, if you're 20, you're the perfect age. Gestalt is a really great way to approach things. So what is gestalt mean? So the gestalt is like is a concept in painting where there's a focus on the overall painting as a whole. So like if you come in and you want to draw a field of flowers, and you come in and you say, okay, I'm going to draw this one really pretty neat flower, right? And then I'm going to come and draw this other really pretty and detailed flower next to it. And like if they're so super detailed, what ends up happening is they look too different from each other. They don't seem to match with each other for some reason. It's just like whatever you're doing over on this one, you go and you do all of the detail on this one. It's too difficult to come over here and do the same thing for the other one. So it doesn't look like a cohesive piece. So what skilled painters and artists do instead is they kind of map things out overall. As they say, okay, I'm going to have a field, and there's going to be flowers over here, and there's going to be a castle over here, right? And then, some mountains in the background or something like that, right? Okay. And then, now that they have things laid out, they're going to go back over it and they're going to add a level of detail. They're going to say, okay, now I'm going to work out the shapes a little bit better. This is actually like a really nice, and this kind of has like a little precipice over on it like this. And okay, and these mountains have snow on the top of them. Okay. This sort of stuff. And you're going and you're adding detail across the whole picture. So one pass you might do the shadows, and one pass you might do the highlights. And they're kind of doing that across the whole painting as a whole, little bit at little, and each pass is getting more and more detailed, right? This is a good way to learn things if you really, really want to understand them deeply and completely. And this book is one of those things that I think if you're a trader, you want to understand deeply and completely, which means you're going to read the book multiple times. And the first time you read the book, you're mostly just trying to understand the main takeaways that they're giving you there, right? Then next time around when you read it, you can focus a little bit more on the equations and say, okay, well, I might not be able to completely derive this equation, but I can memorize what the end equation is, right? The end equation usually is something that a basic understanding of algebra, like I write to you all the time. Y, I need to use my pen here. Where are we at? Y omega times the square root of Q over V. Right? I think most of you understand that. You might not remember what the consequences of a square root are, but then I can go and I can show you that to say, right, the square root of 0.1 is equal to, 0.01 is equal to 0.1, and the square root of 0.02 is equal to 0.14 ... Okay, now you see it doesn't scale linearly. It's a curve like this with an upper limit, essentially, right? Okay, now you can go back another time and you can say, okay, now I want to be able to derive all of these. How did they get to that and derive them from scratch, right? You're not going to catch everything in one pass. I think that what people do is they watch this and they see this equation and they go, oh, this is important. I need to understand everything about this math here. Because if you were in school, maybe they would test you on that. Like, you need to be able to derive this equation yourself or something like that, right? Well, you're not in school. You can use any approach that you want. And I'm saying, leave that until later. When you get to that point, you understand the other larger picture things first. Because that's what's really going to be important to you in trading. And then you can go back later and you can understand the math. And that would be so that, if you want to be able to make your own math, then that's where that would be valuable stuff to learn, right? There's that always an Indian guy on YouTube who can teach you anything. Yeah. I'm just telling you, it's not that you can't, that the resources to learn it aren't there. It's like the structure and having a teacher teaching it to you and a lecture and the ability for you to be able to ask questions, because these are things that, like, I don't think make intuitive sense to people at first, and it's going to take a couple of questions and different ways of looking at it until you go, oh, I see. They're just, because if you don't know calculus, I'll try and show you some calculus. So, like, an integral is like, if I have an equation and it's a line like this, and I want to find out the volume or the area of this shaded portion, how do I do that? Well, so there's this parabola. What if I measure it like this? And they have big squares like this, right? And I can measure. I know what the area of this square is, and so this will give me adding all of these little squares together will give me an approximation of the parabola, right? But it won't be perfectly accurate. And the smaller that these little pieces get, the more accurate my measurement will get, right? Well, what if I could make the width of them be infinitely small, so that you had an infinite number of these being added up together? Then you would have a perfectly accurate measurement of the area under this parabola, right? And that's what an integral is. So you go and you say an integral between a and b of this equation. And then there's all of these rules for how you transform that equation into, to find the area of it. That's what calculus is about. And there's like a different, there's basically rules for every type of thing that you learned in earlier math. Like there's square roots and exponentials and ln's and e's and all of those crazy wild things, right? And there's tricks and things to know about every one of those. So that's why there's so much to learn about calculus. That's why it's quite a big subject that you're going to spend, 3 or 4 years in school learning. So the idea that you're going to go and learn calculus, like, on the weekend over the course of a month or something, it's super, super hard to do on your own. What level of calculus is in the book? Yeah. I think that there is stuff. So what he's saying is, one of the places in computer science where this calculus is used a lot is you could have this equation that's like y equals ax plus by plus cz. So there's 3 variables, x, y, and z, and each one of them has a scalar in front of it, right? But then we can say y2 is equal to a2x plus b2x, or y plus c3z. And then y3 is the same thing, but with 3's, right? Plus c3z, right? And the question is, what are x, y, and z? How do you figure that out? Well, you can do derivatives of all of these, and you do all of these rules, do all of this calculus on it that will basically solve the equation for you and get x, y, and z. And this is essentially how a lot of algorithms, like the Google algorithm, this is how it works, is that the Google algorithm, y is the page rank, right? This is the page rank. But the page rank is based on who links to me and what is their page rank. Well, how do you determine that when you've got this big, you've got like 1,000 websites and they're all linking to each other and stuff? How do you sort that out? And so what you're going to do is you're going to create one of these for every website. You can say this website is, okay, and then I get linked X time, I get linked A times from this website and B times from this website and C times from this website, right? And then you do all of the calculus and it solves all of the equations and gives you the rank for every page. And computers have a way of basically doing matrix math, turning this into a matrix and doing the matrix math on it so that you can do it really quickly on like a video card or something like that to solve these sorts of things. And a lot of machine learning algorithms and stuff on the internet works with this. And I do believe there is some of this in the trades, quotes, and prices, although I can't quite recall at the time where that comes from, but I know I've seen this in trading somewhere. So but like seriously, for you guys, or at least the thing that I would focus on is understanding the key takeaways. Like the math is there in the book. If you want things proven to you, if you want to look at the empirical data, look at the studies themselves, understand how they came up with this stuff, possibly do your own research, then you need to understand this stuff. But to understand the big takeaways that are going to be relevant to you in trading, you don't have to understand that, right? What are the big takeaways? A market is not informationally efficient. Every order has an impact. That impact is much higher than we anticipate, but there's also an upper limit to it, which means that big orders do not have as much of an impact relative to the small orders as we think. And it's a chaotic system where every order really matters. And those are all really important things to understand in order to even start going about trying to find an edge in the market, right? And they're going to bust through new lows here. It looks like they're kind of coming back down here really quickly. Looking at this, there was about 15K worth of selling in the 10-year. The selling never really stopped in the 30-year. So, but it is also still looks like it's flattening. I can see the 5 years a little bit lower than the others. So I think if we were going to move lower because it's the 30-year that's selling, it would have to be leading the way, and that's not what's happening. So they may bounce here a little bit again before maybe then lining up and going lower. I always knew it deep down when it started in 2019, but somehow I ignored them because everyone on Instagram seemed to be millionaires from trading. Yeah. I mean, it's so weird. It's so... Do edgy people have a natural? It's just so weird to go on Reddit and read what the average trader is doing. It is just like such a bizarro world to me. I mean, I understand it because I was in it. I used to believe in all the technical analysis, but now that I take an empirical approach, it's like, how can you all be trying to do the same thing and failing at it and think that you actually have something that works? Like, especially since the whole thing about technical analysis is that it's technical, that like I can quantify things and I should be able to backtest it and all of this sort of stuff. Like they should be like clear patterns. And the whole idea is that those clear patterns should make it more clear to make objective decisions than some sort of fuzzy logic about the world and where the economy is going and all of that sort of stuff, right? But then when you get deep down into the technical analysis side of things, you realize that they just fuzz it further and further. It's like something doesn't work, and so, oh, well, it must be more fuzzy than I anticipated. and then it doesn't become this strict objective thing at all. Handwriting is not very good right now. I need to practice. I haven't been practicing. A, B, C, B. That's better. Yeah, when I started searching on YouTube for courses, every single one was about patterns and indicators. No, I have a draw pad. I have a pen. That's what I'm doing. But I tell you what, using a drawing pad is a real skill. Because when you're drawing on a piece of paper, you know, you can kind of see your hand as it moves. And there's a one-to-one relationship between how much your hand moves and how much it moves on the paper, right? But with a pad, they're not quite there. And so it's still kind of this hand-eye coordination that you have to build up. But I've never felt like I had very good handwriting either, so I've kind of been trying to adjust my grip. This is where it gets, because I used to hold it like, I don't know if you can see, like I used to hold it with two fingers out like this when you're supposed to be like this. What I found is that your two fingers are what moves things up and down. So that's why you want to have one on the underside and one on the top, and then the thumb just kind of keeps it locked in. But you don't want to do this. You don't want your thumb to be twisted like that. You want it to be, you know, bent like this. And you don't want this finger to be like this. You want it to be bent like this. And then kind of the more pointed your finger is, the easier it is to kind of, because like if you're like, well, like if it's like this, I find that's a little bit harder to control. and I will rest the pen against the finger here to give it stability. Sometimes it will end up way down here. So I see some people it's way down here, but I'm usually up here. And then you get something where you can really make good circles. But it's really the up and down is the most important part in our writing, at least in the West, is more about creating good straight up and down lines. So that's why you really need those two fingers to be up and below it and stuff. Yeah, now imagine being left-handed. Sierra Chart's free trial is expiring? So if you don't want to spend any money, I don't know. That's kind of rough if you don't want to spend any money. You might, because the thing is I think that the ways to learn out there still all involves opening an account. Like if you can open an account, then there's a bunch of places you can go that have free platforms that might make more sense for you. I'm also trying to get into doing it pressure sensitive. So apparently you have to, like, when you're doing a downstroke, it's supposed to be thicker. So you go min. Ni. Mom. You're doing it all pressure sensitive, like calligraphy. I don't think I could ever do calligraphy. I don't think I'd be very good at it. Anyways, when I'm trying to draw things out and write stuff, it definitely helps. It's a lot faster than trying to do it with the mouse, for sure. It actually kind of makes me wonder. I saw this thing on I think it was on TikTok, where this guy, he learned to become a pro gamer or whatever with a drawing pad like this. And he actually got really far with it and kind of made me think like, hey, maybe actually that is a better control medium, because I can be way more precise. So if I can be more precise and I can move so freely like this, why would I prefer to use a mouse? Minimum I see for Sierra is $26 a month yen. But the thing is when you're doing like demo accounts, you can only renew it with a new email so many times before they realize that you're doing that and they just ban your IP address. So, because I've gotten my IP address banned from those when I was doing it at the very beginning. Because I owned the Jigsaw software, but I was just doing either combines or demo accounts. And, you know, it wasn't until I finally just opened up an account, you know, still trade at Sim, but have an account, and then you don't have those problems. Use Tor? No, that doesn't work that way. Tor is a protocol that, you know, they're not, your trading platform is not using the Tor protocol. Does Jigsaw have, well, so Jigsaw has a built-in demo account, yes, that I would say is better than everybody else's demo account. The downside of the Jigsaw demo account, like if I put an order on here, well, it's not so bad right now, but sometimes you can see a little bit of a delay. Because basically my message has to go to the Jigsaw servers and then back for it to work. So sometimes the Jigsaw demo, when you put orders up, they seem slow. I used to do this thing, and did you know for Gmail that you can put a period anywhere within your email address and it basically ignores it? Like, so you can put it, you know, my first name dot my last name, but then you can go first letter dot and then the rest of my, and then second letter dot, and that, you know, websites will accept those as different addresses, but they'll all go to your Gmail. So that's how you can kind of fool systems into letting you use the same email for multiple accounts. But like I said, eventually they'll go and they'll make it easier for them to see it. They go, oh, look, all of these demo accounts will all go to the same IP address, and then they just ban you. And then when you actually get an account with them and they're blocked, and then they go, oh, okay, you're finally paying for it, and then they unblock you. That's how it works. I don't know. It's a rough thing because futures trading involves a substantial risk of loss and is not suitable for all investors. And that's kind of the really funny catch-all to it, is that the people that are going to be the most capable at futures trading will probably have too much going on in their lives to actually do it. I can't get away from that. I think it's so interesting. Oh, that was terrible. There we go. That one's really good. There might be other ways to get around it. I tell you what, though, it's a lot easier to just pull $400 together and start an account. I understand for some of you guys that are in other countries and stuff, it might not be practical to do that, but oh, I was going to switch off of this tab here. That's what was going on. OPEC postpones summit over production disagreements, reports the Wall Street Journal citing sources. Well, the oil has been declining today. I'm not seeing any move in oil at the moment off of that headline. That's very curious, though. I've never heard anything like that before in oil. Oh, here we go. Jigsaw Trading. Somebody was asking about, will they have Black Friday sales? Here they have it. Only 200 coupons are available, and the offer expires midnight on November 27th. 200 coupons, strictly one discount per customer. Offer expires midnight, November 27th. So if you were thinking of getting one of Jigsaw's packages but were hesitant for any reason, here is your chance. So you can get $100 off of Day Trader Independent, $150 off of Day Trader Professional, and $250 off of Day Trader Institutional. The same with just getting them on their own. $100 off of Journalytics Annual. $100 off of the live trade and Journalytics thing. Yeah. So it's basically the similar Well, if not the same, it looks to me like it's the same. It's funny because they've taken the one that they used last year and they've just updated because the comments at the bottom are from like 2020. That's funny. Oh, did they really? They had a banner that said increase your money for retirement? Well, obviously don't go and trade your 401k, all right? But I a lot of the better traders that I've seen were like old retired guys. It is kind of like if you really got a big wad of cash, and you're retired, have anything better to do, right? Then that kind of solves the conundrum. That is like, most of the people that have the ability to take on the risk are going to be too busy to be spending their time day trading futures. But if you're old, that's one way in which it happens. It's got to be you've either got to be old or somewhat autistic, right? Autistic or ADHD, that you're just obsessed with it. Yep. They have the money and the time, exactly. And that's how it happens. And my audience is older than most on YouTube. That's why I think that a lot of the things that I try to do, like I'm like, let's build the Twitter following. Yes, I do have a Twitter. Hardly anybody goes and finds it. Maybe part of that is because I never talk about it, but probably part of that is that most of my viewers don't use Twitter because they're older. What if you identify as old and autistic? Does that? Yeah, probably. When I say autistic, what I mean is that you have an abnormal obsession with the financial market. So that could come from autism or ADHD. I guess a normal person could do it too, and they just are attracted to it. Yeah. I see a lot of, so there's this other side of it with kids. Well, you're 18. Is that a kid? I don't know. But, so if you have the ability to go to a really nice school where they have a good quant program or good finance program, and you can go to one of those and hope that you get hired at one of the big banks or a financial institution or something like that. And then you can do real trading for an institution. Now, there are some things because real trading for an institution is not quite as fun because you're not making the decisions, right? You're just executing the trades of somebody else that's made decisions. But it's a much better gig. Got to tell you, like you make money doing that. If I'm young, I would want to go in that direction. Because the thing is that if you at the age of 19 dedicate your life to retail trading, basically what you're doing is you're spending all of your time developing a skill that you may not have success with. And then what else can you do? You don't have anything else to really do with your life if you're not successful with that. And that happens a lot. Like you can see that from some of these older guys. Like, I'm not going to name names, but some of these older guys, if the market somehow changed in a way that like they literally just couldn't trade anymore, what would they do? Trading's all they know, right? That's where it's kind of like, if you're a kid, you might not want to put all your effort into trading at this time. I would keep track of the markets, trade on your own, etc., 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 but be working on a different career, right? Because that's what I did. Was I went into computer science, and somehow I found myself in SRE, and that is paid really, really well, and technology is paid really, really well in general, and that's what gives me the ability to be able to take on the risk. And even with all of that, because of life situation with the kids and other things, I'm not able to take on nearly as much risk as I would like to, but I'm hoping that in a year or two I will be able to. I'm not here to make $1 million. I am trying to understand how it works, and I'm pursuing a degree in commerce. Oh, there you go. Good. You're on the right track then. I get super nervous because I don't want somebody to be like, oh, 10 years ago, you encouraged me to just become a retail day trader, and now I'm broke. It's like, because I feel that that's what a lot of trading influencers are doing, is they're trying to convince anybody that they can to get into trading. And I feel like I shouldn't need to convince you to get into trading, right? I feel that I should be telling you, like, everything is don't trade. Everything that I tell you is don't trade. Here are the risks with it. Here are the problems with it, etc., etc., etc. And then when you ignore me and you still want to trade, then I know that you're ready and that we can work with you, right? That's how I approach it. Yes, I think if trading is your true interest, it won't hurt if you first learn math, stats, and coding instead. These are things that will prove useful outside of trading if that fails. Exactly. And I think one of the bigger things is that you really do need to be a little strategic about what you do for a living, because I've seen a lot of people, that I knew from school and stuff like that they didn't do that, and now you come into the modern economy, and what they wanted to do doesn't get paid jack squat, because there's too many people doing it. So you have to go out there and say, okay, what am I good at? But then where are there places where they need more people to do this? Or this is really a hard thing. Like, what am I going to do? What's going to give me that edge that will help me get paid more than the average person, right? What I do gets paid well because you have to have a broad array of knowledge. You have to be able to understand both the code and to be able to analyze and find problems within code, but you also have to understand the infrastructure and the networking and everything else that goes along with that. And then on top of that, when there's a problem, you're the one that has the most stress because you're the one, it's your job to deal with that. And, not everybody can deal with that stress. That's why that job gets paid well. Right? When you're kids, when you're like a teenager, you don't think about that. And so teenagers will go and pursue careers and things that or degrees and things that's like, okay, yeah, but then what are you going to do with it? Right? You pursue a degree that, I don't know how this evolves in our society from here, but it seems to me that going to college, if you're not going there to be an engineer, doctor, or a lawyer, that you're probably wasting your money. Or business. I guess you can justify business degree too. Do you think computer science is still as high in demand? Yes. Or at least you will get paid better than average. I mean, I think that the median income is 60 or 70,000 in the US now, and your average computer, like entry level computer science guy, is now 70 to 80,000. So right away, you're getting paid more than average people. And then I think that the issue is not everybody can do computer science, actually. It seems like, oh, okay, I'll just learn to program. But the number of people in a college level computer science degree program, computer science program, let's say, whatever, the dropout rate is actually very, very high. There are a lot of people that cannot do it. They just lack the problem solving skills. There are some people that just don't enjoy it and drop out. So there is kind of a problem in that there is not an infinite source of people to do this stuff, and it just keeps getting more and more important. And some people think, well, yeah, but pretty soon ChatGPT will be able to write all of the software for you. Well, a little skeptical about that part. I have found ChatGPT to be a useful tool in some situations, but you still need a person behind it. And I think that as we get deeper into AI, the needs might change. Like what computer science people are doing might change, but they're just going to become more important. So yeah, I still think getting into technology is a great idea. You're using an AI for ultra scale. Okay. Who is NNT? There is definitely some like abuse and misunderstanding. You know, like a lot of people don't understand that ChatGPT is just combining stuff that people have said on the internet. I know it seems super realistic and everything, but it's not actually thinking. Oh, Nassim Taleb. Yeah, it's not actual intelligence. Yeah. So, like, you can't ask it logic. You can't ask it a unique logic problem and expect it to give you a correct answer because it doesn't know. It can only utilize information that's already out there. That's like a huge limitation. Basically, ChatGPT becomes the real innovation here is like it replaces search. You can ask ChatGPT the question, and it can compile information from across the web and present it to you in exactly the way that you want it to. That's the power that ChatGPT gives you, but it doesn't think. So I can't tell. A lot of people came in and tried to do this early on to say, I had ChatGPT make me this strategy. Well, what it's doing is it's taking strategies that already exist out there on the internet, like that people posted on Reddit and whatnot. Reddit is probably one of the biggest sources for ChatGPT, by the way. Okay. And so whatever strategy that it's going to give you is going to be BS. It might appear to work for a while, but I guarantee you that it's not going to survive a 5-year test. Guarantee it. Because it's just utilizing, it doesn't create new knowledge. It's not actually creating, it's just redoing stuff that other people have done. Right? Like you can go and tell ChatGPT, draw me a paint, or not ChatGPT, but some of these algorithms, so you can tell them, draw me a painting in the style of Dolly or something like that, right? But you can't tell it, make up your own style. Can't do that. It can't make something that nobody's done that doesn't have some basis for. Yeah, it might not affect jobs as much as people say because you still have to input information in it. Yeah. Well, and one of the key things to understand is that a lot of the predictions and everything that people are making are basically going through with the assumption that we're about to invent general artificial intelligence. which is to say something that really actually does think and can come up with new things, I think that we're probably very, very far away from that. I do not believe that all of the intricacies and power of the human brain is just contained in the frontal cortex. I think that there is probably another network that is quantum in nature that we don't understand at all and that we will not be able to duplicate. So I don't think that general artificial intelligence, as they term it, will replace people. But to that point, I also don't think that general artificial intelligence is close. I think that it could be possibly 100 years or hundreds of years before they have that technology. I think this stuff is very much in its infancy, and that we're very far away from something that actually thinks for itself. You think organic matter? Well, but we don't even really understand what intelligence is. What consciousness is. Yeah. Like, this is where I'm saying a lot of people theorize that consciousness is a quantum phenomenon. I think that makes a lot of sense, but I think that you kind of have to get into pseudo-religious arguments and stuff to go down that path. Right? Like, what is a soul? Is a soul actually something that exists only in the quantum realm? But then if that is true, then I suppose that they could get sentient. So Monaco's saying he's using neural. So I've definitely read stuff about utilizing neural networks to assist in scalping, but I don't understand that enough to write that myself yet, or really to even comment on it. Every time that I try and pick up a book on this subject, it ends up being like way more complicated than I have the ability to understand. Should be like this. It should be like. That's a pretty decent looking calligraphy, yes, yeah. Maybe I should just get the ink and do the calligraphy thing. Yeah. I don't think I would have attention span to get good at calligraphy. Let's do a stream. Well, if Monaco was willing to show me how it worked, well, first of all, I don't think that it would be a good idea for us to completely show you how his algorithm worked, right? But if he were to give me some insight into it and like how he's utilizing the neural network part of it, that would be, I would 100% be willing to do that if he could prove to me that he was actually doing it and all that. It would probably be, I find that stuff really difficult. So I got this book. Where is it? Machine Learning in Finance by Matthew Dixon, Igor Halprin, and Paul Bilocon. I don't know how you say that name. Anyways, when you get into this book, you're getting into statistics stuff. And it's like graduate level. It's a little bit above me. It's a little bit above me, to be honest. because this book is even more math. This is even more math than Trades, Quotes, and Prices, Financial Markets Under the Microscope. And like the thing is that I know that you can go and write machine learning algorithms and stuff like that without really completely understanding how they work. And I thought that this book would kind of do that, but it's not. It's going into the math of every single one of these. And yeah, I don't know. I think there was another, because I saw another book where I thought that this book had like Python exercises in it and stuff like that, and I'm not finding that. So it must have been a different book that I was looking at that had that, and I need to do that book instead. Because basically, I said this was going to be the book that I'm going to go do, and I got like, I think I got into like a third. I think I read a third of the book, and I just felt so lost that I was like, I need to come back to this at a later time. So I got a couple of things that I got, some books that I've like haven't really. So there's this one, Fundamentals of Applied Probability and Random Processes. So this is like kind of the advanced statistics kind of stuff that I need. And it explains Bayesian learning and stuff. Like, this is good. I really like this. And there's exercises at the end of every chapter, and I was doing them, and I actually got pretty far into this book. But you know, this is like trying to learn calculus on your own. That's super, super hard. Then there's this other one, which is Low Latency Interest Rate Markets, Theory, Pricing, and Practice. This is very, very interesting and very, very relevant to what we do in interest rates and so forth. But it's kind of like the professional side of it. So like this, if I wanted to go and work for Goldman, writing algorithms, trading interest rates, right, then I read this book. But I haven't had the time to really dive into this one too much. But everything that I looked at it, I was kind of like, oh, yes, okay, that makes sense. That makes sense. Oh, I see why they would do this. It's kind of interesting. So I think I'll do series 3, and I'll get a different machine learning book. I also have over here. I have Stegum and Robinson. And this has got some bond calculation math in it as well that I want to learn. But kind of the thing is that a lot of that is stuff that like I want to know it, but I don't know if I would actively be utilizing it day to day. So it's hard for me to justify spending the time in it. And it's just really hard for me to find time to do things right now. When I have time, when I have free time, I'm usually spending that time working on my desk, doing woodworking essentially, and I'm doing the series 3. So when I'm done with the series 3, I can get into that sort of stuff. And another thing was that the things that I was starting to get into. How to run the well, you just have to get like Rhythmic API essentially. That's what I intend on doing when I get to that point. Yeah, so I tried, setting some things up with algorithms. So the big thing that I did was I wanted to see, can I make an algorithm that listens to the stream and listens to everything that I'm saying, and then does a ChatGPT sort of thing with it, and evolves as I talk to it and teach it, essentially. It's something that could kind of manage the stream side of it, because I've seen these algos on Twitch and stuff that like it's completely a computer algo, and like what the algo does, it's learning from the stream. As people hit the like button, it adjusts its behavior based on that feedback. So that's super interesting to me, where it's like, okay, can I make an algorithm that uses what we're saying and then looks at the market and uses that as its reinforcement mechanism to figure out what to pay attention to and what not to and so forth, and give us ideas. But the first part of it is it needs to be able to transcribe everything that I say. And I found something that does transcribe everything that I say and I can run on my local machine. But I cannot run that and the stream at the same time. So I've been working on building up this infrastructure for it, right? And I'm almost there. We might buy some computer hardware this Black Friday. And then I think at some point, well, I have some interim solutions for like the network connectivity, but eventually I think I got to get some nice switches and stuff like that. Then we can start to work with that sort of stuff. Because then I'll have the hardware and the extra CPU cycles to do it. NVIDIA Jetson? Let's see here. Wouldn't have caught that short, but darn. Oh, you mean the S&P 500 turning back down? Yeah, that was kind of a big head fake, wasn't it? Oh, you know, I don't remember. I could pull up the code though. It wasn't a program. I mean, it was a library, of course, but. Actually, I should do it like this. Go and find my notepad. I think this is how I was doing it. No, I think I was doing it with code. Yeah, I was doing it with VS Code. Haven't been writing as much code lately. Here it is, real-time transcription. Yeah, this is it right here. Streamlit, Pi Audio, WebSockets, Asynco. Okay, so it uses the Assembly AI API to perform real-time transcription. You can't find any news on the reversal? Yeah, I think that one was probably just a head fake. Oh yeah, sorry, I didn't have this up and you can see the code that I'm looking at here. Oh, no, wait. Hold on. There was... oh, well, we're about to get news here. That's what I'm seeing. Yes. We're going to get University of Michigan sentiment final in 45 seconds. Is head fake a term banks use? I don't know. I'm just saying that the S&P 500 bought up on the open and then retraced it, and there may not be any news. It could be entirely endogenous. In fact, I'd say it's likely to be endogenous because the S&P 500 does that quite often on its own. Well, thanks for dropping by, Monaco. If you want to give me like more information, you can do that on Discord. Okay. Don't use Windows servers to run your scripts. Yeah. Okay, so it was 61.3 versus an expected 61, but the inflation expectation 1 year was 4.5 versus an expected 4.4, previous reading of 4.4. So inflation expectations slightly higher than anticipated. They are selling off of it. I don't know if it's going to continue or if that's significant. I think that you probably have a decent shot of it extending there. Can you create an algo and work with a firm which can provide you with funds and you guys collaborate? If I am able to, actually not be lazy, like you gotta understand. So the thing that I'm gonna say, and then like I get distracted and I trail off, is that my 2 toddlers really, really dominate my time right now. So, I'll get off work, I'll go work out. When I'm done working out, I have to watch the kids so that they'll leave mom alone, because especially the 2-year-old right now, he will not leave her alone, and he is whining all the time. Every night this week, it's basically been him screaming for hours because he just doesn't want to go to sleep. It's like once he realizes that you're trying to put him to sleep, he starts to flip out. My wife was able to get him to go to sleep last night by taking him in the car, so we got an okay night's rest yesterday. That really takes it out of you. And when the time that you have to do extra stuff is in the evening, it's a lot harder to get stuff done in the evening. I may eventually move back to a period where maybe Mondays and No News Fridays I don't stream, and I spend that doing this sort of stuff, because I need more time to do it. Or there's the weekends, I guess. But you get what I mean. So there's kind of like personal life is not being very conducive right now. So I call it lazy, but it's really not that I'm lazy. It's that, I'm actually doing way more than the average person would. And I'm very ADHD, so it's very, very hard for me to do all of that, okay? But I think that if I get myself to the point where I actually am making these algorithms and they're having success, I don't think that I would have any problem getting funding. Because, one, I can just trade my money and make money with it, right? If it's really a very good algorithm. But number 2 is that I have a Series 3. I have a Series 65. So I can do investment advising. I can basically run a hedge fund at that point. So I could start a fund. I could start a commodities trading pool. Like, you guys could invest and provide the capital if we got to that point, I think that's a really hard pull. I think that I really have to have something amazing to get to that point. But I'm just saying, if I discovered something that was truly valuable, I don't think that the funding would be the difficult thing, right? The difficult thing is getting it off the ground, bootstrapping it myself, making some money, being able to hire other people, that sort of stuff. Those, I think, would be the real roadblocks. I would really love to have something where, not that I think that I would be great at it per se, but I just want that experience of running and owning a business with, managing other people. But small kids really need parents. It happens to everyone. It does, but I also do believe that my kids are not a little bit, a lot bit more demanding than the average child. So my older one is very clearly autistic. It's so frustrating because most of the time he's just a complete angel, but then he'll go into manic mode and he just destroys everything. Right? So imagine when they're 2, they get into everything, right? 2 is when you really have to have the house like child-proofed and everything, because they're going to try and touch everything and they love to make messes, right? Okay. Now imagine having a 2-year-old that basically never grows out of being a 2-year-old. Like, they continue to be like that into 4 and 5. That's what my kid is. Yeah, Gold got crushed there, didn't it? I'm trying to recall I remember last time we had this report. I remember the market moving pretty far last time we had this report as well. But I don't remember Was it as big of a miss as it was as this one? Oh, they don't do. I don't. This one doesn't have estimate. This one doesn't have estimates for it, so I can't say what it was in October. I seem to recall it being like a similarly relatively small difference, and the treasury's just absolutely falling apart from it. This one, it's like, I could have made $10 if I had traded it, but I'm super worried about trying to trade it down in here because it looks like it's in the hole right now. Looks like it's in the liquidity hole right now. You can, well, there are limits, but I don't know. My sister is 12, but still is 2 years old and very, very pampered. Yeah, I don't know. I was just like, with Asher, he's 3.5, 3 3/4 now. He was born in February, so he'll be 4 in February. He's autistic. Like, he just does not understand a lot of social things. He's only just now starting to like babble and even try to communicate. I don't know if he'll ever actually fully speak. He could just be mute. And yeah, he makes these insane messes. So yesterday, or not yesterday, it was like last week, I think it was. He had somehow found a package of glitter and threw glitter all over downstairs. Oh my gosh, that was such a nightmare. There's still stuff there everywhere. You sit down there, you can get glitter on you. It's just insane, right? And Ethan, like, how many kids? I think that crying and not wanting to go to bed is like a thing for all kids. Okay, but how often is it, or how common is it for most kids to, your bedtime is 8 o'clock and they stay up screaming until 4 a.m. Because that's what's happening to me. Like, usually by 2.5, I guess he's not 2.5, he's 2 1/4. Usually by 2.5, they're starting to get into a groove with sleeping, right? And he's still keeping us up in a way that like only infants do, right? So it's not to like, this is not like the Oppression Olympics or anything like that, but I'm pretty confident at this point that my children have special needs. And we're still not sure how we deal with this, especially if it ends up being like, for the rest of our lives sort of a thing. I don't think that my wife can take it. Like, she's starting to lose herself a little bit. Okay, so they're still kind of rotating here in the 26 area. So I can kind of see it like right here in this range. You see here at 20, oh my gosh. Interesting. So at 26, nobody put a bid up there and it was just empty for a second. But then when they saw that, then they traded it down another tick. So that means that we are definitely in a sort of a liquidity hole at 26, but the selling flow may not be done yet. So that it's early enough that we could continue going down despite the liquidity in this market being just absolutely decimated. No, it wouldn't be like that. Our family is so big that raising kids is easy because of the grandparent taking care of the kids. Parents are a bit free. So my parents are about to retire, actually. So I think that, you know, what you do is, as Mormon people, is you go on a mission of some sort. So I think that they will go on a mission. We'll see. And then when they come back, who knows? I think my brother wants their house. I think that he lives with them right now. They're trying to save up for a house. I think that the plan is he's going to buy the house from them. But what I would like to see is I kind of do want to move. I don't want to move away from where I am in that whole situation. But I want a larger house that's a multi-generational house, right? I want a multi-generational house. That seems to make the most sense to me. But we'll see if it happens. I'm sure, as the way that things are going, I'm gonna bet that multi-generational houses become a lot more popular. Well, how much did they move there? So where did I say the hole was at? Was like 26.5 or something? They're already quite a bit further. So now there's been another $10. I probably should have participated in this. I kind of made the decision that I wasn't sure that the 0.1 difference in inflation expectations was a big deal or not. And what I'm seeing is that it clearly is. And I kind of suspected that it was, but I just wasn't confident, you know? So I'm not quite sure why I got that one wrong. But now I really feel like I've missed the move and that it would be foolish to try and get in here now. I was messing with these sorts of In India, families are very close and seeing 3 to 4 generations living together is common. Wow. Yeah. Okay, so let's... I don't feel comfortable taking trades off of this, but I do want to be like involved a little bit more so that maybe I can see what it is. So I'm gonna try taking some trades here on Sim, not because I think it's a great trade or anything, but because I think that will help me start to get an idea of the flow that we're getting in here. So I saw a pretty big iceberg at 23 that would have been a level break continuation setup, so I'm testing that one first. I kind of suspect that might flip on me here. So far, it hasn't ticked against me, so... So I'll take the loss on that. Oh, we got out. Good deal. Wait, why did it take the opposite position? Okay, that's so fucked up. I screwed that one up. I think I clicked an extra time. I clicked twice there and ended up going short when I didn't want to, but the first one scratched. Does look like if I had held that first one a little bit longer that I would have gotten the one tick. Okay, but I'm definitely seeing some of this, like, there's starting to get a lot of volume trade here. So like at 26, it was like the liquidity just wasn't there. And the sellers weren't done, so they just went. Now at 22.5, you can see that the liquidity is there. Now, they'll probably exhaust the liquidity, but that makes this much more likely to be an area that creates a liquidity hole that holds and maybe possibly causes a reversal, right? Well, the S&P 500 doesn't look too happy about it so far. Wouldn't say that they like got, well, it was about 7 points when it happened. 7 points in the S&P 500 when it happened. And there's an uptick. Okay, so I'm going to try the risky hero trade here, all right? Okay, so I got filled on a pretty aggressive... Basically, I don't like the way that I got filled there. But I suppose if this is going to work, that it's going to kind of be like that. Yeah, see if this flips back up, it might do so very quickly. I don't know, even getting that 24, I'm pretty proud of myself. If it fills. Come on, fill. Hit that 24. There we go. This is much more of a technical trade. I mean, obviously, I have to understand the context of why they were selling in the first place and like how many lots I think that venues can actually push. But we pushed about like what? Went from 90 to 75, so about 15,000 contracts, which is about normal these days. And forming a liquidity hole here, yeah, there's a really good chance that you're going to get a small pullback. Now, I don't know if I can really get more than 26. I do suspect there was a little bit of selling there that might have been like people trying to sell the pullback. So but I still suspect that the passive orders are buy despite the inflation expectation news, and the market may be overreacting to that. Okay, so there's 24 again. Yeah, that's looking good. You think I'll get the 26? I might be pushing a little bit too hard for that. Still getting pretty aggressive buy volume coming into it, so the gobble trade. I don't know. I it seems to me, I'd have to go back and look, but my recollection is that we've had a couple of wild moves going into Thanksgiving in the past, right? It's always like either the holiday is really tough trading, or you get this wild trend. And I don't completely understand why the flows are like that. It has something to do with people positioning themselves into the holiday, but still. Okay, so I'm kind of getting a hint that maybe my second contract should be at 24.5. There is an iceberg bid there at 24. You ever talk about trading the cross before the market close? Not sure what you mean by the cross. No, we're never around for the market close, so I would not say that that's my specialty. Although I definitely see really interesting stuff happen going into the close in the treasury market, going into the options pit close. So there probably is some edge to be gleaned there. It might actually be easier edge to grab than some of the other stuff that we try to do. Yeah, it got close to being filled to 24.5. If I had placed it earlier, I would have gotten filled, but I guess I screwed up on that one so far. Yep, well, every weekday I'm here. I wouldn't say that I place a trade every day, but I'm always here. I almost never... I'm very punctual. When I was in high school, I never missed a single day of attendance in high school. And yeah, it's only been a handful of times. Like the handful of times when I've missed streams were like when my children were being born. So yeah. Well, it's coming back up there. There's definitely, given that sort of like we can move across this area very easily, sort of liquidity hold behavior is just that, like, again, you're going to find this edge where there's more liquidity. And so it requires a much bigger impulse to get up through that. And the scalpers don't want to hit into that. And I'm scared that that's at 24.5. I was seeing some volume trade there. And then they started to get reluctant. That's why I put that there. But I might be too late. But, you know, you would rather it be like there's the edge and they just can't get over it sort of a thing. Because I hate it when it's like they're there and all somebody has to do is hit it with a lot and it would go. But nobody does. You know? Hey, gold is still selling off, by the way. Gold is just getting destroyed here. Oh my, they took out 23 a little bit too easily that time. So I was thinking about adding there, but I did not like how easily that traded, so... I think so far I'd say that this was a really good entry. Actually, one of the better entries I've had. But like you see that right there. They also took 22.5 on only 581 contracts. That kind of suggests to me that this is a dangerous position. Like it's making me think of going for before she goes over on this side. Okay. We're about to get crude oil inventories now. So that could be really, I mean, oil has been really interesting this morning, and then we're getting all this inflation stuff, and then you get oil. That's going to be a wild trade over there, right? Well, I put in a lot up at 435, but they didn't fill that. Of course not. Looks like they did trade some volume to bust that, though. They're gonna recover that. Okay. Okay, so the oil was a build. Is like they gonna sell? Man, that's looking like it's not gonna fill that. So what I just saw there really makes me want to buy it now, because they pushed down to a new low. It kind of fell apart. You know, like it was able to push down through there on like hardly any volume at all. And then it like just reversed just as easily. So like when sellers had a great opportunity to push it, they did not show up. Now, where are we getting? And I wasn't really seeing like strong movement in the dollar per se on that either. In fact, I would say the Japanese yen pushed to new lows when this second rung happened right here. Oh, I guess that doesn't correlate. Never mind. That was this. It was correlates to this and. But I'm not seeing the Japanese yen reverse. I think that the treasuries are reversing a little bit more than the Japanese yen. So I'm a little hesitant to play it at like 427, 430. Maybe if I had taken the opposite trade over up here, 435. Then I could try and hold it for a 10. Because this does look like a short-term reversal to me.
Block sell.
Whoa, what the fuck? Wow. So somebody just sold everything that was on bid at 23.5 and everything that was on bid at 23 and just shoved it down to the lows. That was wild. And the market makers took a lot of it. Like, look, that was 10K iceberg at 23. That was a 10K iceberg at 23. So, that's really bizarre that somebody would get that aggressive at that time in that location. Usually when you see lots like that go through, it's not supposed to happen. But I just can't imagine why you would be puking it there, you know? So that seems a little sus to me. So basically what we just saw was a 2-tick sweep in ZN. I haven't seen that in years. Like I have to go back to like the earlier days of my trading, like 2017, 2018. To find trades like that. I do think I've seen them go both ways. Like I've seen them where they plow through that and then they just keep selling. And I've seen them where they plow through that and it stalls out and reverses. I kind of suspect that if we were to, get a decent bid at 23, that you could see this unwind quite a bit. Still, I'm tempted to get involved now. Like when I see stuff like that, it makes me want to take trades. But I don't want to mess with a big guy like that, right? I don't know why he did that. I don't know if there's more behind it. If I'm not the informed trader in that situation, then I don't want to trade against it. Basically I come in and say, oh, okay, fine. You mess with that. I'm not going to provide the liquidity for you. That was wild. I'd say they're holding it pretty okay so far, but they have not been able to get a very good bid at 23, so they're not recovering it yet. That was literally like 15,000 contracts all at once. And see, they kind of ate away that offer there, but they weren't able to get it to go bid. 30-year is kind of lagging here a little bit. So that's the other thing is the 30-year, not so sure it's cooperating for a trade in the micro here. If the 30-year is going to lag, that auto reversal, we won't make very much in a 10-year on our micro 10-year. Well, they can't seem to eat through 22.5 either, so you got something that has really created a very strong liquidity hole here. Because they've been having struggles both ways at 22.5. There's a possibility that like there's further puking and they like just absolutely bust through these lows. What are your favorite correlated markets to trade? Well, I mean, I trade pretty exclusively the treasuries right now. I watch the Japanese yen and the dollar index very, very closely. The Japanese yen is extremely correlated with the treasury market. And we've caught many, many good trades off of, something happened in the Japanese yen. Then the rest of the market was just catching up. How this is going, man. This is like, the Japanese yen is dropping here, by the way. Nah, the ES is just too random for me. I have a swing trade in the ES, so Jigsaw has this bug right now. I've actually made them aware of it, and I'm sure that there'll be a fix in the next version, but if you shut the platform down and reopen it, it doesn't reload the old positions correctly. But you can see it if I pull up my position window here. I have a long in the S&P 500 basically from 45.19, a swing trade. So essentially 45.20. So it's up, 50 points or whatever. But that's like a swing trade. And I intend on keeping that open until the first or second week of December. But for the most part, like, especially for intraday movement, I find the S&P 500 to be extremely random and extremely difficult to trade. Yeah, I don't know about this. I kind of do think that they're going to push further now, but I don't think that it's actually going to be like they careen down there like I kind of thought. I think that they'll just kind of push a little bit further and a little bit further, but I don't know if I shouldn't say I don't know. I don't think that gives me very good risk reward at this particular time, because it's like, I'm going to take it short. It's going to meander around. I'm going to give up on it, and then it's going to go down. Because there is a crazy, crazy, crazy liquidity hole here. So that's going to be difficult for them to get away from. But the Japanese yen was selling there, and I think that's why the treasuries kind of came back down towards those lows. I know, just as an example of like how random is the S&P 500, they're retracing and heading back up towards the highs. So I started watching stock trading the dollar after one of your videos. Oh, very good. Yeah, I have that indicator. So if you're on NinjaTrader, I'd recommend getting my indicator suite for $100 lifetime license. And if you don't want to do, you don't have NinjaTrader, make sure you have a chart of the euro and the yen, because there are some very, very strong correlations there. See, it's kind of doing it at 22 as well. Low liquidity there. Orders just kind of slowly trickling in. But they're not really chomping at the bit to hit 21.5 yet. So this is kind of what I mean, where it's like, I do think that they're going to trade lower, but it's might be like a really frustrating and slow march lower. Okay, that's the first time that they've made 22 half. Oh, and actually a good bid there too. 22 half. Now 23 is still kind of the roadblock. Like, they're eating away at it. I think that it could go bid. Let's see. Because it would be really interesting if this started to come back up and like all 15,000 of those contracts had to unwind or something. I see you don't use a slap. How far do you... it depends. Usually I don't take more than 10 or 15 ticks loss. So... But... You know, it's kind of funny. We all talk about risk management, because the thing is you got to avoid the fat tails, right? But to some extent, breaking the conventional rules of risk management helps you, right? You just got to know when it's time to break those rules and when you really need to just step away, right? Someday the treasuries will have some crazy limit move against me and I'll regret doing that, but... I'm super paranoid though about people trying to sniff out my positions and do stuff based on them, and so I don't really want people to know where my pain threshold is. You know, I pretend
I try to pretend that I'm like this guy that hit 23 and 23 half, right? I don't know what that was, but everybody saw it. He knew that everybody was going to see it, and he has to take that into account into his trading. So that's why I say when you see an order like that, it's usually not meant to happen. Like, it's usually somebody screwed up somewhere. It's just that in that situation, with it having pulled back a little bit and everything, I don't understand why somebody would be puking there, you know? But maybe it was intentional for everybody to see what is it that he's trying to do to the market when that happens, right? Because now everybody's seen it. You can kind of see how the volume is evening back out and trying to push it back up. And basically move it against him, right? Like now there's like a short from 23 and the market's fighting it. So I think the same way. I think, you know, I assume that everybody in the market is watching what I'm doing and that I'm a big trader and I have to adjust how I trade based off of that. And I don't want to trade in a location where I'm kind of leaving myself vulnerable to somebody screwing up my trades, right? Because that's the way it is basically in the market. It's like you take a long or a short, even one guy can ruin that trade. $10.50, well, but on the micro treasury yield futures, that's not a lot. Here in the treasury, like this one where I have the orders out, that one I base it more on money because I'm practicing trading multiple contracts, right? So on this one, you know, if it went $1,000 against me, then I might bail. That's why right now I'm keeping it to 3 contracts because I'm still a little nervous about it. I'd say it's been in this liquidity hole here between 22 and 22 half for a long time now. They haven't been able to make 23 go bid yet, but they've come awfully close. Okay, there they took 22. I would say normal amount of volume traded on that. Ticks back up easily. Okay, so the liquidity came back there at 22 quite easily. Is there something going on in the Japanese yen? I always try and remember that, like, the robots, most of what they're doing is correlations. So if they bid strongly at 22, that usually means that, like, the correlated asset moved up too. And I can see that it did, but only by a little bit. So it might be, I might be just picking up on noise with that. At the moment, though, it's not looking too good for me. Like, they're not busting through to 21, but they're hanging out at that low a little bit more than I'm comfortable with. There's still a decent amount of volume that had traded on there that has to come out or rebalance too, so... Okay, so they took 21 half. It's brief though. Oh wow, it's actually moving back and forth there quite a lot. So I'm gonna say for this position up here up top, even though I could go as much as 1,000 against me, this is kind of already not cooperating with what I wanted it to do. I think over on this one too. So I think I'm just gonna bail on this whole thing. Like, the issue that I see now is I saw an opportunity for some unwind. It's not doing that. That doesn't mean that I think it's gonna keep trending, but
yeah, you might be sitting here for a really long time waiting for it to come back up to 23, right? There's some iceberging happening at 21 again. So there is liquidity down in here. Yeah, we still got 10 minutes. Okay, so when they tried to take it bid, wasn't able to hold the bid either. They took out 2,000 contracts, but didn't bid. In big, yeah, not big, but moderate volume on both sides here in this location. Ooh, a 4K. There's a 4K iceberg there. But they took it and it's staying offer. Now they're hitting into the other ones, so now I definitely have to bail on this, right? And we'll keep here. That probably means that it reverses from here, right? I can see the 30-year is selling here real hard, so... Oh, wow. Maybe it will just be a trend day. I don't know, because that last move is actually quite a little extreme. Like, that is not indicative of a market that's like gonna go dead for the rest of the day. That is more like a we have so much to sell that it's going to take us all day to do it sort of a thing. And it's very, very interesting that it's like going into the Thanksgiving holiday and everything. Maybe they're concerned that like Black Friday will go well and then that would like, you know, cause interest rates to go up more. And because it's just like a lot of selling here in this situation. And they're well past now the point at which I would have been like, oh yeah, that's about normal. That's how much they should have done. Yeah, this is a 30K sell now at this point. Once we get into the 30s, that's when it's like, yeah, that could trend all day. I think overall, though, I made a big mistake by not taking a trade like initially after the news. Like after it came down, I very easily could have. Where would it have been? Oh, I can't really see it. Like, let's say 28. Like, I very easily could have taken a trade at like 28. Could have sold it at 28. And then it would be a lot easier for me here, right? Well, it looks like on that one, I also got exactly the wrong spot. So it's kind of funny. The first trade that I took, I was like, hey, I'm like really in tune with this market. Like I caught a really good spot. But then since that time, now I think that part of my problem was just because I was the wrong direction. But like that one trying to flip it 445 is not working out at all. So there's small little tries in relative to how much this has moved, so I don't think it's a huge deal, but a little disappointing. Yeah, I definitely use cumulative delta, so what I'm doing is I'm looking over here and I'm seeing that from here to here, we sold by 30K, right? And it kind of goes that like once you get beyond 30 or 40K, you're starting to get into like big moves, and that's when there's a real possibility of it turning into 60, 70, 80, 100K days, right? That's where you start to get into the days that just sell all day. All over a tiny 0.1% difference in inflation expectations. That's pretty wild, right? I have to wonder how much of this has to do with it going into a holiday. Do you hate more than just entering at a turning point, or when the trade goes your way and then reverses? Oh, I definitely, I want it to go my way almost immediately, right? I really hate sitting in something that doesn't go my way immediately, because those usually don't work out. Like, usually the best I can do is scratch it. Like in this situation, I'm left wondering if I can scratch it at -5. But it's like it's watching me, and as soon as I take the trade, it does the opposite, right? I thought that I was in a congested enough location that I would be safe from that sort of stuff, but apparently not. We are in the, I think that this push lower was second leg of a meta order. Because I was kind of betting on it being over, but the second leg of the meta order came in, so I was wrong on that one. But then the second leg of the meta order just died out so quickly. I don't know what to make of that. It's funny too, because I even called it and I'm like, look, this is where, because I'm puking on this position, this is where it's going to reverse. But then I took the opposite. I took the trade on it continuing here, and it did reverse. Well, they're running into a little bit of a wall there at 21.5. So, like, when they come back to the scene of the crime, you can see people piling back down on top of it. I find that a little bit encouraging that they might slip back down towards these lows and revisit these lows. Let's see if they're able to clear that or how it'll react. So today is the 4-week bill auction, but because those are 4 weeks, I would anticipate those would be relatively okay. But given how much we've sold today, maybe that auction will have a hard time. Maybe that's why I'm continuing to see such active trade in a situation where I kind of expected things to die down, is because there's still the auction. That must be it. Because normally they would like careen down on that thing and find a spot and just end it. See, how am I getting this so wrong, guys? What's wrong with me today? I find this situation a little embarrassing. I wasn't able to catch any piece of that. Like, gosh. And I don't like that bit at 22. Like, now it's threatening to go back through the 23 again. Now it's back to the original trade. And you watch, if I puke right here, that's like exactly where it's going to stop. Well, I don't want to be in that situation though, because you know, you don't want to be like with your stop right where it's going to possibly break through, right? I should probably just stop right there because that whole sequence of events was kind of stupid. I'm not happy with. Comes down, I'm looking for it to break above this thing. It careens down there and immediately comes right back to that area. I don't understand why it's doing that sort of stuff. Probably better for me to not touch it. Plus, it's time for us to get going. So, not too much harm done, I guess. But disappointing. Wasn't good for you either. We'll see. They may as of yet not be able to get back above 23. Could be funny to see this recover back through. I mean, if the auction is still out there and they want to buy the auction, you could see it. You could see this continuing to buy back up, right? But I'm betting that the reason it's being so active is because of the auction. Because normally when it's a holiday, they try and get their business done quickly, right? I guess we'll see. But I don't think I can stick around, so I will have to see you guys next week, Monday. In the meantime, stay excellent.